Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock related queries. And don't forget that today is Friday and we're going to be getting you Buy Now, Sell Now Pathshala as well with Kunal Bothra. But before that, let's have a look at what the markets are up to. So, Cheryl, a sharp fall coming in on the benchmark indices, but nevertheless, the broader markets are still holding quite well.
Absolutely. A very good morning to you, Shrishti. And yes, definitely it is Friday, but the markets are taking it a bit easy right now. As Shrishti mentioned, we are off the day's highest point quite noticeably when it comes to the benchmark indices. Is Nifty Bank that has actually slipped in the negative territory. So take a look at what Nifty Bank is doing. Actually, it is actually underperforming the benchmark indices at the day's lowest point. Remember this despite very healthy numbers coming in from HDFC Bank when it comes to the quarterly update, the operational updates, as well as for Bandhan Bank and the other banks as well. So you have Nifty Bank that's under pressure in trade today. But apart from that, let's take a look at what the broader markets are doing. Take a look at what the mid cap and the small cap index are doing. Are they holding on to gains? Yes, they are still holding on to mild gains. But there also you've seen actually a sharp fall from the day's highest point, and HDFC Bank is at the day's lowest point as we speak. Let's take a look at a list of gainers and losers. Then it is Adani Ports, Hero MotoCorp, TCS as well as SBI Life among the gaining side of the market, while on the flip side of the market, Sun Pharma is the top loser on the Nifty with a downtick of about 1.7%. Britannia, Nestle, Cipla, DVs, all of them taking it a bit easy. If you look at the advanced decline ratio, and as I speak, you can see the advanced decline ratio actually coming in neck to neck. It was earlier in the favor of the advances. Now looks like it's neck to neck when it comes to the advanced decline ratio. Let's put the spotlight then on the sectoral indices and what the sector picture is looking like. Suffice to say, the pharma index is among the top sectoral loser in trade today. 8-10% downtick coming in for the pharma index. You have FMCG also taking it a bit easy. While on the flip side is the IT index that's bucking the trend. 1.2% uptick coming in for the IT index. Realty also holding on to good gains, about 0.5%. Even auto is in the positive territory. So that's the way how the markets are looking like at this point in time. Shrishti, yes, we are definitely off the day's highest point when it comes to benchmark indices. Key to see if we sustain in the positive territory or no.
Well, yes, Cheryl, we'll have our eyes on that. But with this, viewers, let's move on and let's go across to Kunal Bothra to find out the Buy Now, Sell Now Pathshala topic for today. And Kunal, onto the screen, we can see price volume breakout. Take us through that. What's the learning for today?
Well, yes, Srishti, good morning to you as well as to all the viewers. And interestingly, this is a topic which we discussed earlier. But then I wanted to highlight, a couple of charts which we've been discussing earlier, and then looking at prospect of a very similar kind of a chart pattern breakout, which could be seen on the stock over the very near term. So price volume breakout typically means that when the stocks move out of a consolidation or out of a downward trend for themselves, there is a new trend in the making on the back of some heavy volumes on the stock prices. So we flagged off, one of the charts, a couple of almost a month and a half out back. That was in Aarti Industries. We spotted that price volume breakout for the stock. So as you can see, the stock was moving into a range for itself, more of a big trading range over here. Here is what you saw the stock going towards an exceptional volume breakout move. And as you can see, this started off with the gap formation for the stock. And then from those 525 levels, the stock is almost at the 650 mark where, we are seeing the stock currently right now. So this is the classical case of the stock ending a major phase of a consolidation on the back of some bigger chunk of volumes, which you can see, and then a stronger follow to price action or a volume action for the stock, something which the stock had not seen in the previous many months of stocks consolidating. Now, one of the similar charts which is popping up on the radar is a very recent kind of a breakout, which is Biocon. And as you can see that the stock again has been to a downward kind of a trending mode over here. It's fallen from almost 350 levels towards a point when the stock was sub the 200 levels. From here, what you've seen is a price correction and then a time-wise correction. Again, this was the previous swing high for Biocon. The stock is confirming a breakout over here in terms of the price levels, but look at the surge in volumes. This is an exceptional move in terms of volumes, something which the stock had not seen in the previous major uptrend for itself. So this was a point when the stock had seen a major capitulation, and from the capitulation point, the stock is now getting into a breakout. So this is a classical sign of a reversal for the stock, and that's why I wanted to highlight this in terms of a chart on the price volume breakout front.
Alright, so this is something new that we've learned when it comes to the price volume breakout. Kunal, to be very fair, we have done a particular, I think 3 or 4 segments on price volume breakout in particular, isn't it? So this is something new for all of our viewers to understand that it's not only one type of price volume breakout that you see, right?
Correct.
All right, so that is price volume breakout for you. Something new when it comes to the price volume breakout in our BNSM Pathshala with Kunal Bothra. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related query. But viewers, ET Now and ET Now Swadesh, in line with helping Indians rise with India, have partnered with Sundaram Mutual to launch Nivesh Day, a groundbreaking campaign to help viewers build their personal finance portfolios through regular as well as disciplined investing. And Nivesh Day is being celebrated on the 5th of every month, which means today is Nivesh Day. So join ET Now Swadesh and Sundaram Mutual to learn how you can build your financial future with an SIP in the mutual funds. But not just that, like I mentioned, this is the show where we get you answers for all of your stock-related queries. So you can write to us on the WhatsApp number that's flashing on your screen, and you can write your stock-related queries, and we will actually direct them to our experts. Today's experts are Kunal Bothra as well as Avinash Gorakshekar. Very good morning once again, Kunal, and good morning to you, Avinash, and Happy New Year to you. Thank you so much for joining us on ET Now. And let me kickstart taking the queries with the first query that's hit the box. And this one is coming from Jaya, who's writing to us from Bangalore. And Kunal, this one is particularly for you from the Defence Pact. She wants to know whether it makes sense to enter HAL and Mazagon Dock at current price, or if not, then what sort of an entry price should she look at to invest in both of these counters? And is there any other stock in Defence Pact do you think is attractive apart from these two?
I think buying at these prices and then at 3,100 odd for HAL and I think 2270-80 for Mazagon Dock are steep prices, because the risk reward is not in favor. I think it's okay that you've missed out into the buying these names, but you have to wait out for a point where the stock's correct. There is no point buying into a stock just because it's run up, because you have to play out for the rewards on the upside. And at the end of the day, what matters is risk reward whenever you're looking to buy the kind of stocks which you're looking to trade or have as part of your portfolio. So I would believe that it may not be a great proposition to buy the stocks at current levels. You have to either have to wait out for a significant amount of correction into these stocks and then look to enter. Maybe a 10% to 15% correction could be a good starting point if that's the case into these names.
All right, moving on to the next one, and this query is coming from Poonam from Punjab, and Avinash, she wants a take on one of the recent listing, that is TVS Supply Chain. She's holding 300 shares from a price of 208 rupees. What will be the advice on this one?
Shristi, and Happy New Year to you as well as Cheryl. See, first of all, TVS Supply Logistics belongs to a very strong parentage and is into the supply logistics network. It's a very good thriving business, but unfortunately, the company still continues to be loss making. And I think, if the investor has at least 12 to 18 months time frame, then only I think the investor should hold on, because in the very near term, valuations seem to have possibly, peaked out. I would not be surprised that the markets are now looking for some improvement in the profitability and a bottom line quarter, which possibly we could see in the coming financial year, that is FY25. So I think if the investor has a 12 to 15 month time frame, she can hold on. She could expect very good rewards provided she's got a long term view. In the near term, the stock will remain extremely range bound.
Kunal, this one is coming from Vikram Singh, and he has a couple of stocks. I'm unsure if you track most of them, but he wants your view on all of them. He's making losses on them, and one is Uttam Sugars. His buy price is 465. Other one is Lumax Industries, 2,690 is the buy price. Sumit Securities is 1,493, and apart from that is Moil 319. He wants a technical view for the next 3 months. Any breakout visible in either of these stocks, because he's making losses anyways?
You'll have to repeat the names once again.
Uttam Sugar, the buy price is 465 rupees per share.
Okay.
It's Lumax Industries, whose buy price is 2,690, and Moil is 319. Sumit Securities, I don't think you track that one closely.
So Uttam Sugar and the second name which you mentioned is Lumax. I think both of these stocks you can exit, because the trends into these stocks are not great enough in terms of the momentum into the stock price. But Sumit Securities as well as Moil, the recent charts have been quite attractive. In fact, these stocks are on the verge of their respective breakouts. Maybe these stocks may consolidate a bit from current levels. You may not see an immediate uptrend to these stocks. Maybe they could correct by a margin of 4-5% from current levels. But the potential for these stocks going forward should be stronger given the way the setup is over the last 3 months to 6 months for both of these names. So I would suggest to hold on to the latter two names, Sumit Securities as well as Moil.
All right. Avinash, the next query that I have is coming from Chitra, and she's a long-term investor and wants to know about GR Infra. She's holding around 100 shares from a price of 1184 rupees, and she's just highlighting that this stock has not participated in any sort of a bull run. So, do you believe that it's a good stock to hold on for the long term?
I think the investor has gotten at a slightly higher level, but I think if the investor can wait patiently for the next 12 to 15 months, I think, the company has a very large order book. Execution has also been very strong. I would not be surprised that the coming year, that is financial year FY25, would be another strong year. And I think they have been entering new geographies also. So I would believe that, given some more time, I think rather than, incurring a loss-making trade, if the investor can spend at least 12 to 15 months further here, I think the risk reward could be better. So I think I would suggest a hold and keep a time frame of at least 12 to 15 months.
All right, Kunal, this one is for you. This one is coming from Nagesh. She's writing to us from Bangalore, and looking at the way how the markets are panning out right at the start of the 2024. He's asked a very pertinent question. He wants to know whether he can short Nifty as well as Nifty Bank January month. He wants your advice.
So for the January month, if you're asking, then maybe it could be a good proposition to go for building a bit of a short position over here. But then you have to keep your stop losses absolutely strict, because I think the previous highs for the Nifty on the futures level is closer to 22,025. So and the index is currently at 21,660, 760, 775 approximately. So you may have to keep a 300-point stop loss if you're looking to trade into index on the short side, because I believe that whenever the index breaks past about the previous swing highs of 22,000 for the Nifty approximately, and some 48,600 for the Bank Nifty, we could be looking at least another 3 to 4% upside on a very short span of time. So keep that margin of stop loss and look to trade if you want to go for that high risk trade over here.
All right, Kunal, the next query that I have is coming in on Biocon, and RK Jalan just wants to know that he's holding 4,000 shares from a price of 234 rupees. You were just discussing this stock on the price volume breakout chart as well. So what's your analysis? Should he continue to hold on?
Yeah, I think you should hold on, I think, and give it more time because I think if the price volume breakout holds true for the stock, we could be looking at a new wave of uptrend for Biocon, something which the stock has not been witnessing over the last many years of falling down or going into a downtrend. So that's one of the major reasons why I would suggest a hold on Biocon.
All right, this one has come from Mr. Singh. He's writing to us from Pune. He's a senior citizen, Avinash. What he's asking is that he wants a fundamental view on Russell India, given the fact that considering the demerger for the longer term. Do you track this one by any chance, Russell India, and how does this one look fundamentally?
No, I think Russell India is into into the business of defense, and my sense is that obviously value unlocking will happen for the company, for its shareholders. Clearly, on the tea business, I would believe that tea prices have considered to be quite stable. So I think for some more time, since the stock is little illiquid, one could hold on for some more time, keep a time frame of at least 12 to 15 months. I would not be surprised that there could be a good amount of re-rating, in this time frame.
Right. The next query, Avinash, is coming from Subramaniam, and he's holding First Solutions, 100 shares from a price of 168 rupees. What's the outlook? Should he continue to hold on or move out of this one?
No, I think First Source is into business process outsourcing, and it's one of the larger units which is operating in this space. It's a debt-free business, again doing pretty well. They've got a very large kind of bouquet of clients, both domestic as well as abroad. My sense is that in the very near term, business process outsourcing units have been facing some sort of margin pressure. But I think if you keep a time frame of at least 12 to 18 months, it's a good stable business, and where I think the opportunity for India to grow is quite immense. So I think First Source is a market leader here, so would prefer to continue to hold on. But obviously the the upside would take a little more time. So keep a time frame of at least 12 to 18 months if you want to have a decent risk reward.
This one's for you from Manjunathan, writing to us from Bangalore. He's a medium-term investor. He has 750 shares of Dola Dairy at a price of 475 rupees per share. The stock is almost double from the levels that he's actually purchased it. Now he wants to know whether he should book profits and instead invest that money in something else, or what sort of strategy should he adopt?
Yeah, I think it's a good time to book profits on Dola Dairy. The stock seems to be coming back into a bit of a resistance zone around this 900 level. So I think the last three candles which I can see, 900, 905 approximately, has been a resistance band for the stock. So which means at current levels of 895 approximately, it's a good time to book profits.
Avinash, the next query is on Vaibhav Global. Pradeep from Kolkata is holding 20 shares from a price of 336 rupees. He's a long-term investor. What will be the advice here?
No, I think he can continue to hold for the longer term. See, because Vaibhav Global's business is largely export oriented. Europe is a very large market for them, and they are into quality jewelry exports. And I think large HNI investors like Vijay Kedia has also got a significant share here. I would believe that most of the negatives are factored into the price. So one could expect a decent second half performance in FY24, and FY24 should be a lot better. So I think if he can hold on for the next 12 to 18 months, he can expect a decent risk reward here.
This one is coming in from Murli. He's writing to us from Bangalore, and this one is for you, particularly Avinash. Though he's asked a 6 months view, but he wants your view, particularly when it comes to Metro Brands. 200 shares at a price of 1,268 is what he's purchased it at. And the other one is Credit Grameen, 500 shares at the price of 1,703. Do you track both of them very closely when it comes to the fundamentals? Also, what's your suggestion to Mr. Murli on both of them?
No, I think as far as Metro Brands is concerned, I think he can definitely consider it as a good long-term kind of bet. See, they have got a large portfolio in the leather footwear segment. And I think in terms of their outlets and in terms of their brand marketing strategy, I think the company has done remarkably well after its public issue. There has been some pressure on most of the footwear companies, but I think now consumption seems to be coming back again. So I think if he can hold on for the next 2 years, he can expect a very decent and a very attractive risk reward for Metro Brands, considering the fact that, I think it's a well-known brand in the urban markets. They are trying to increase their geographical network across pan-India. So one could expect levels of around 1400, 1450 over the next, say, 18 months. And which was the other share?
Credit Grameen? Credit Grameen Access. Sorry, Credit Access Grameen.
Yeah,
I beg your pardon.
Sorry. No, I think, Cheryl, this is another microfinance player, and they've been doing remarkably well. In fact, the Q2 numbers were very robust. In fact, the management commentary was also good. So I think here he can definitely hold on, considering the fact that microfinance activity has picked up in a very big way since COVID. And I think considering the kind of geographic reach which this company has got, I would not be surprised that we could see levels of around 1850, 1900 also. Very strong numbers, and I think a lot of good funds as well as HNIs have invested here. So I think continue to hold for the next 12 to 15 months here.
All right, Avinash, once again a query for you, because this one is on Jupiter Wagon, and I remember that after the company announced that they're going to be foraying into the electric vehicle sort of a segment from the wagons, so this shift actually made a re-rating for this counter to happen. So Shankar wants to know, is this a good time to enter Jupiter Wagons? Do you still believe there's much headroom for growth from these levels after the run-up that we have seen in the past 1 or 2 years?
No, I think, see, in terms of order book, Shristi, they are doing extremely well. In fact, just a couple of days back, the Defense Ministry has awarded them 400 crores of fresh orders for wagons, open wagons. And I think at least for the next 2.5 years, revenue visibility is more or less assured. So I think, stock which was available at around 50, 55 rupees is now almost 335 rupees. So I think if the investor wants to invest now, I would suggest keep a 2-year kind of time frame, because, most of the upside, at least from the lower levels, has already happened. But looking at the kind of growth outlook for the wagon sector plus the electric vehicle sector, I would not be surprised that we could see levels of even 375, 400 here. But here, I think you need to keep a longer time frame of at least 18 to 24 months to get a better risk reward.
So that's the take coming in on Jupiter Wagons. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere.
Welcome back. You're still tuned into Buy Now, Sell Now, Aniti Now, and let's keep it going with all your stock-related queries with Kunal Bothra as well as Avinash Gorakshakar, which are the guests for today. And Avinash, the next query is coming on automotive axle. I'm not sure whether you tracked this one or not, but sort of wants to know how about buying this particular stock at this point in time, maybe for a medium-term outlook.
First of all, Shristi Automotive Axle is a Kalyani Group company. They make front axles and the rear axles for the commercial vehicle trucks. In fact, for most of the trucks which are exported as US Class 4 trucks, I think Automotive Axle is a very leading player. They have a collaboration with Meritor of US. So I think the company is having a very good technology and I think a very robust order book. But I think if the investor has a 12 to 15 month horizon, then only I think he could consider buying into this company because clearly, the stock is not fairly cheap. It's available at fair to expensive valuations. So I think if he can keep a time frame of at least 12 to 18 months, he could definitely expect a decent risk reward, considering that both in the domestic market and the export market, it's a very well-known player, has a very large market share, and earnings growth, at least for the next couple of years, looks to be quite solid.
All right, the next one is coming your way, Kunal. This one is coming from Ramamurthy. He's writing to us from Bahrain. A very happy New Year to Ramamurthy. And Ramamurthy is one of our consistent viewers who writes us all the way from overseas. And he wants to know, Kunal, whether he should put profit in Infosys at 20%, Axo Nobel as well as Sula. I'm unsure if he's making 20% profit in all of them or he's just making 20% in Infosys and the other two also he's making profits. So he wants to know whether he should go ahead and book profits in these counters and instead look at Ashok Leyland or City Union Bank for the matter of fact.
Well, I think it could be a good strategy to try and move out from these stocks towards not Ashok Leyland as such, but you can probably look out for maybe Tata Motors at current levels of 800 approximately. You can also look to consider buying many of the other pharma names which I think heading towards a breakout. So for example, large cap stocks like Cipla, etc. Lupin look attractive. Biocon is something which I flagged off earlier. Voltas is something which looks attractive from a medium to long term play. And if you want to go back to the traditional large cap stocks on the banking side, then I would still recommend buying ICICI Bank at the sub 1000 levels. I think that's also a very attractive level to buy as well as hold on to the stock from a long term play.
All right, so that's those are the long-term plays coming in from Kunal, the top recommendations. And even Kamal had a question on this one, so I hope Kamal that answers the same. But moving on then to the next query, this one is coming from Shrikant from Bangalore, and Kunal, he has 1,000 shares of Balrampur Chini. He didn't share his buy price though, but he wants that in the next 1 month, what's the outlook and any targets price on this particular stock?
Well, I would believe that the recent rally and the price correction prior to that indicates that the trend is still a bit sluggish for Balrampur Chini. So, I think the stock fell from 480 levels to 380, which is a good 20% correction for the stock in a matter of few days. And from 480 the stock 380 the stock has managed to bounce back towards 420 425, which is almost like the midpoint of this 100-point correction for Balrampur Chini. The stock unable to break above this 425 mark is a point of concern. So my sense is that the stock would probably get into a corrective phase from here on, maybe try and retest the 380 levels. So if you're looking to buy, that could be a good zone where you can look to average out further.
All right, Kunal, this one is coming from Vidya from Chennai, and Vidya is a short-term trader. And Vidya wants to know about Reliance Industries, 40 shares at an average price of 2,430 rupees per share. Vidya is saying that it's in good profit right now, so what to do? Hold on to the counter or book profits? I believe this is a multi-billion question, isn't it? What to do with Reliance? First of all, luckily she's in profit with this particular counter. So what sort of a strategy?
Yeah, I think she's amongst the many traders who are in profits in Reliance Industries, especially when you are holding on to the stock from low levels. Now, the point which you have to look out for is that the stock is on the verge of a breakout. You're already sitting on good profits for the stock from buying at lower levels. The stock is on the verge of a breakout. This could be a potential 2-year, 3-year breakout for Reliance Industries. And we've seen the history of the stock also in terms of the charts that the stock has a odd tendency of consolidating for maybe 3 years, 5 years, at a stretch. But then whenever the stock gets into a breakout, those breakouts are very sharp and swift for the stock on the upside. So best way to try and do is maybe keep a 50 point or a 70 pointer trailing stop loss from your profits on Reliance Industries and give it a chance in case if the stock breaks out this time around of this major resistance. We could be looking at a huge target for the stock on the near to medium term.
All right, Avinash, coming to you for this query because this one is on L&T Finance, and we had a couple of days back Kunal's view on this one. But Avinash, what's your take on this stock coming in? Bhagwan is holding 500 shares from a price of 133 rupees. Good to book out profits or continue to hold on?
No, I think he can continue to hold, considering the fact that see L&T Finance has the parentage of Larsen and Toubro, and I think they are very large players in the infrastructure space. They've also entered tractor financing, two-wheeler financing. So I think the coming year, that is FY25, should definitely be a lot better, and with interest rates likely to soften a bit in the coming financial year, my sense is that L&T Finance could definitely get re-rated. The investor has not made a significant amount of money here. So I think if he can hold on for the next, say, 12 to 15 months, he can expect a decent upside, even from the current odd levels.
All right. The next query that I have is coming in from Sekar from Karur, and he wants to know about Nestle. Is Nestle worth a buy post split for a period of 2 to 3 years time? What's your take coming on that, Avinash? Split or no split? But do you think Nestle makes sense to be in the portfolio for the longer term?
See, I think clearly, if you're looking at the next 2 to 3 years, Nestle can definitely give you very rich rewards. I think the stock has been split, so that would encourage a lot of small retail investors to buy into the stock. But this is not an intraday or a short-term stock, so keep that in mind. Unless you have got a 2 to 3 year kind of time frame, only then you can invest in this company and sit tight. I think rewards will do come in, but I think you need to have a lot of patience and conviction, and obviously, given some more time before you can expect a very decent risk reward here.
Okay, Kunal, the next query is from Velavan from Oman, and he's holding 65 shares of Chambal Fertilizers from a price of 295 rupees. He's sitting at decent profits in this one, but can continue to hold on for the next 3 to 6 months. Should he go ahead with this?
See, ideally, I would have kept a target. I think I kept a target of 425, 430 for Chambal Fertilizer. I was looking at the recent charts and the breakout closer to that 340, 45 mark for the stock price. But then, the stock in the last 2 days is showing some, a bit of a tough kind of a candlestick pattern. So yesterday's candlestick pattern was a bit bearish on the stock price. Today's follow-through price action is again a bit negative for the stock. So my sense is that if you're sitting on good profits, you should be ideally looking out to book partial profits over here. In case if the stock comes back again to 400 levels and breaks past, then you can probably keep a higher target of 430, 425 on an average for Chambal Fertilizer for the remaining or the balance quantity which you may be holding.
All right, this one is coming from Anub from Bangalore, and he wants to know, Kunal, at what levels can he look to exit City Union Bank? He already has 200 shares at a price of 158 rupees per share. Would you advise him anytime in the near term to exit from this particular counter or stay put with City Union Bank?
See, the only point with the stock is that it lacks momentum because, I think in the last 5 months, if you look at the charts for City Union Bank, there have been many a times when the stock has suddenly fallen by 15 rupees, 10, 15 rupees or 10% kind of a margin. And then it takes months for the stock to get into a recovery mode to break past about that initial level of breakdown for the stock. So that's the only concern for a stock like City Union Bank. I would suggest that you can maybe stay put if you have the time frame of another, say, 3 months or 4 months for the stock. Give it another try, because if the stock manages to surpass about this 165 mark from where it has corrected, you may probably expect another 10% on the upside. But if you're looking to add, I think it's not a good proposition to add the stock at current levels. In case if you're looking to add from the mid cap end of the banking names, I would actually recommend buying DCB Bank at current levels as well as on dips.
Right. Avinash, the next query is on Bajaj Electricals, and Dr. Subaya is holding 100 shares from a price of 1040 rupees. What's the outlook on this one? He has purchased this very near to the current market price. Good to hold on?
Yeah, I think within the consumer electrical segment, Bajaj Electricals is a very well-known brand franchise, and I think after a lot of underperformance in the previous 2 to 3 quarters, I think hopefully the coming financial year, that is FY25, should be a lot better for them. They have a very good geographical network, a very good bouquet of products. So I think if the investor can give in the next 12 to 15 months, I think definitely there could be some uptrend which could be visible in the stock. we could see better numbers, in fact, from the third quarter and fourth quarter onwards, because typically the second half is usually a much better half for a company like Bajaj Electrical. So I think continue to hold, but given a time frame of at least 12 to 18 months to get a good risk reward from here on.
Right, one more coming your way, Avinash. This one is coming in from Aparna from Kerala, and she's already purchased KFin Tech at around 310 rupees per share. 300 shares of this particular counter she has, and she purchased it a year ago. She wants to know whether she should stay put with this for the next 3 years. Fundamentals actually guarantee better returns.
Yeah, I think this is a very steady cash flow business, Cheryl. I think they are into the same business like what CAMS does. My sense is that if the capital markets do well, the mutual fund business continues to grow, then I think that gives a huge amount of runway growth for a company like KFin Technologies. So I think next 2 to 3 years, if the investor has the patience and the tenacity to hold on, I think you could expect a very good risk reward. So I think continue to hold, and I think you would definitely get a decent risk reward if your time frame is pretty long term.
He wants a view on Amara Raja batteries. He has written to us earlier as well when the stock was trading around 630 rupees. And since then, the stock has run up. But at this point in time, do you believe that the stock can run up even more from current levels?
So it can, but I think comparatively the charts of Exide are looking a much more better, because that's a stock which has managed to show signs of strength even I think in the phase of the correction for the stock. I think comparatively, when I look at the time and the price wise bottom for stock prices comparatively, I think Exide was the one which had formed a bottom first, and it's seen a good participation. So relatively, if you ask me, I think Exide is a better chart. So you may look at buying this stock as compared to Amara Raja battery.
All right, one more coming your way then, keeping in mind the battery as well as the EV theme then, Kunal, and this one is from Mali from Hyderabad, wants to know, makes sense to buy Electra Green or JBM Auto? Which one of these should she look to buy, and at what price?
So I think Electra Green is a better chart. The stock has come out of a major consolidation, a time-wise consolidation, and we've been discussing time and again that the stock which gets into a price correction and then a time-wise correction generally get ready for a breakout pretty soon. So I think I would probably prefer Electra Green.
All right. The next query, Vinash, that I have is from Ram from Coimbatore, and he wants to know a take on a couple of counters and are they worth buying. He has stocks like Rajesh Exports, Quest Corp as well as Webhub Global in mind. So any of the stock pick that you like for a fresh investment here?
No, I think within these three, Shristi, I would say Quest Corp looks pretty interesting because they are into the manpower management space, and this segment in the market has got very selective players like Quest Corp is there, Team Lease is there, and I think with the upswing in the economy, my sense is that the job market would continue to be quite promising. Quest is definitely a specialized manpower company. And supplies specialized manpower kind of requirements to a host of sectors, including IT. So I think if the investor can continue to hold, for the next 12 to 18 months, one could expect a decent uptrend. The stock has corrected from higher levels, and I think has got a very strong parentage. And definitely, not only the domestic, but even in the international market, they have a large chunk of business coming in. So Quest would be a good, decent buy, even at the current odd levels for a decent risk reward, but over the longer term.
Right, this one is coming from Padmaseva Rao from Bangalore. 10 shares of Endurance at a price of 1800 rupees per share. Kunal, what's the near-term target that you're keeping in mind for this one?
Well, I think today the stock seems to have hit those targets. I think 2300 has been the high for Endurance Tech. The stock is at 2100 right now. So I think if you've bought at lower levels, I think 2300 broadly could be a better target range for the stock. In case if it manages to come back to those levels, it's a good price point where you may look to book profits.
All right. Another stock which is showing a bit of a breakout, Kunal, is Indus Star, and you highlighted this some time back as well. And Narveer is holding the shares from a price of 209 rupees. His quantity is 1100 shares. Should he continue to ride the rally or book out profits?
I think you should continue to ride the rally on the upside. I would believe that this could be a start of a very strong uptrend for Indus Star. You may be surprised, that the stock has come out of a major time-wise and a price-wise consolidation, and the chunk of volumes in the entire last year has been significantly high. I think if I'm not wrong, the average volume previous year for the stock was almost 2.5 times the average volume of the previous 2 years for the stock, and in the previous year the stock has seen a good recovery. So maybe the stock could probably break past about the previous major swing highs. I believe that the stock should be good for at least a 270, 275, maybe in the next 6 to 9 months, if you have that kind of a time frame to hold.
All right, this one is for you, Avinash, coming in from Sudarshana from Bangalore. You're holding Tata Power 100 shares at a price of 324 rupees per share. Makes sense to buy some more right now of Tata Power in the portfolio, or is there any other private power company that she can look at for us to invest in a similar time horizon? Her time horizon is 12 to 18 months or so.
No, I think Tata Power also continues to look attractive. I think although the stock has moved quite significantly in the near term, but I think if you give in a period of 12 to 18 months, I think she should stick on to Tata Power. They are now gradually moving into the renewable and the green energy space, the electric vehicle charger kind of opportunity space. And I think over the next couple of years, their business model would be quite well spread out on the green energy side. So I think probably, if the investor can hold on for the next 12 to 18 months, you can add even at these levels and take a time frame of at least 12 to 18 months and continue to hold.
All right, so that's the day coming in on Tata Power. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking your queries. This one's coming in from Vivek, and apologies, Vivek, we've not been able to take your query. Kunal, for you, Hindalco at a buy price is 519 rupees per share. He wants to know what sort of a target should he keep in mind for the next 6 months.
See, I think at 590 to make money over the next 6 months could be a bit difficult for Hindalco, because the stock seems to be already have come back into an overbought territory. So right now it's going through a retracement process. My sense is that the stock should actually come back towards the 540, 560 mark before it manages to get into a recovery. So if you ask me for the next 6 months, I would actually expect a trajectory first on the downside and then a recovery for the stock back towards the 590, 600 mark. So I think it's best that if you can exit the stock at current levels and then look to buy back in case if the stock dips back towards that 540 levels.
All right, the next query is also for you, Kunal. This one is on Engineers India, and Shiva wants to know that he's holding these shares with a profit of around 40%. So is this a good time to exit this particular stock?
Well, yeah, I think it's a good time to book profits into the stock. The only reason is because of the huge divergence the stock is at from its long-term moving average. I think that's one of the major reasons why I would believe that if in case there could be a mean reversion, the mean reversion could be a bit steep for the stock. So I would suggest to book profits.
All right, this one is coming in from, let me take this one, coming in from a viewer who wants a technical view once again, Kunal. 70 shares of JK Infra at a price of around 440 rupees per share. Any upward movement seen in this particular counter, or should book profits?
So you can hold on, but I would suggest to have a trailing stop loss over here, because the stock in the recent charts have shown a gap. So I think 500 to 550 is the gap for JK Infra, and I think 550 could be a decent short-term stop loss on the stock, and hold on to the stock, keeping that as a stop loss. And on the upside, if it breaks past about the 635 mark, you could be looking at a potential target of 680 to 720 for the stock.
All right, moving on then, and this query is coming in on DLF, and Kunal, once again your view, because a viewer wants to keep it, Neha wants to keep it just for the next 3 months. So do you believe that in the next 3 months the stock can touch around 900 levels as well?
Well, after such a steep rally, it's a bit stretched to expect that the stock would probably continue to do cartwheels over the next 3 months. So I think if you have that kind of a short-term time horizon, it makes sense to start booking out profits. Or at max, if you want to assumingly hold on to it for the next 3 months and see how much more can the stock go, the best strategy is to keep a trailing stop loss. And the first trailing stop loss which you can keep at current levels could be at 700, 705.
All right, with that, let's kickstart with the rapid fire then. And this one is coming your way. Avinash Raju from Bangalore has 100 shares of Wipro at 410 rupees per share. Makes sense to stay put with Wipro for the longer term, or look to exit this one?
I think you can hold on, keep a time frame of at least 12 to 18 months and continue to hold.
Okay, Avinash, any take on Oriental Rail? Mayank Saraf is holding these shares from a price of 170 rupees. Can hold for the next 2 years. Good to hold?
Yeah, definitely. I think it's a small railway infra company and it did a recent preferential issue. So I think, order book and growth prospects seems to be quite good. So continue to hold.
All right, this one's from Najib from Calicut. This one's for you, Kunal. Adani Power, 2,000 shares at a price of 220 rupees per share, making handsome profits in this one. Should look to book profits right now and then again buy on dips?
No, I think you should hold on.
Okay, Avinash Anant is holding 10 shares of Grasim from a price of 1946 rupees. Sell or hold, and if it's a sell, then can he make a switch to Subros?
Yeah, I think Supros would definitely look as a better alternative switch, considering the fact that Grasim is now making a rights issue, and finally it's a holding company, so valuations would be capped. So Supros would be a better bet for the next 12 to 18 months.
All right, this one is coming in from a viewer, David, and David wants to know about Vodafone Idea, 13,000 shares at a price of 10 rupees. Yes Bank, 3,500 shares at a price of 13 rupees per share. Kunal, what's the upside seen both of these counters? Should he look to exit right now?
Yeah, you can maybe book 50% profits into both of these stocks and then the balance keep it for another maybe 15 to 20% upside.
All right, Kunal, the next query is coming from Sarma and wants a view on Coal India. She is holding the stock from 360 levels. Any target on this one?
It's a good time to try and book out profits if you're a short-term investor.
All right, this next one is coming in from our viewer who is also calling me right now. Avinash, this one's for you. LIC Housing, the buy price is 380, book profits or hold?
I think LIC Housing can be held on, considering the fact that second half is normally a very good company for housing finance companies. And coming year, interest rates being low, I think should do better.
All right, Avinash, what's your view on Marathon Realty? Sanjeev is holding 100 shares from a price of 450 rupees. Good to hold on?
I think, here, since the stock is little illiquid, I would suggest that, a stock like Anantraj at the current levels would be a better bet, or switch to Anantraj would give in a better risk reward compared to Marathon Realty.
All right, with that, we come to the end of the rapid fire as well as queries. Thank you so much, Kunal, as well as Avinash for joining us on the show. And particularly, thank you, Kunal, for the BNSN Pathshala today. And with that, viewers, we come to the end of this week's edition of Buy Now, Sell Now as well. So, as always, thank you so much for tuning in from Shrishti, myself, as well as the producer Boski and our director Santosh. Thank you so much for watching. See you next week.